In this video, we're going to cover off three-dimensional risk management paths across cryptos, stocks, and commodities. We're going to get familiar with the smart money institutional buy and sell levels across Tier 1, Tier 2, and Tier 3 charts. Let's run the numbers. Junk bonds, which are a key indicator of risk-on or risk-off behavior, are following the negative path. That's not surprising as the DXY continues to strengthen. It's currently following the positive path. Institutional buy and sell levels are more than one. A lot of people, when they get into the market, they think there's one level of support and one level of resistance. There is not. Smart money support and resistance levels are many. And we can see the DXY, currently 105.0560, has a smart money level of support at 104.8706, a smart money level of resistance at 105.1994, and a lower level of support at, this is smart money support, it's not regular retail support, at 104.5318. We always see these lines, these structural support lines and structural resistance lines called SLs or Stanfield levels. Price is always moving SL to SL. If it can't go below, it's going above. And we can currently see some degree of momentum towards that 105.2025 level. An increasing DXY throws pressure on commodities, the stock market, and crypto. It also encourages yields to come up, and when we look at the US 2-year yield, we can see that it's currently following the positive path. It's following it a little bit more weakly than anticipated because we've seen that the yields did not rebound. They actually weakened, and this is on the heels of Fed speak from the Fed presidents that raising interest rates may almost be done. Looking towards the US 10-year yield, we can see it's currently following the positive path. This is putting a lot of stress on the stock market and especially crypto and commodities. With approximately 11 days to go until the next FOMC meeting, we can see the probability of a 25 basis point increase in the federal funds rate, which largely drives the US 2-year, the US 10-year, is 7%, slightly down from 8%. 1 day ago. This news is good for the stock market, good for crypto. Decreasing yields will put negative pressure on interest rates and weaken the dollar. We can see that gold has been following that negative path, hit by the US 2-year, the US 10-year, the decrease in risk-on behavior, and the increasing DXY. The CTKS method identifies institutional buy and sell levels. And when we pop on the CTKS indicator, we can see there are so many structural sell areas that gold is interacting with. One at 1925, 1926, 1928, and 1929. There's very minor support around that 1919 area. No wonder gold has been coming down. Looking at the S&P 500, we can see that it's currently following a negative price path. These three-dimensional risk management curves are available in the CTKS method service, which is at ctksmethod.org. Looking where smart money buys and sells requires a different view and a different lens than the retail lens. The S&P 500 has been marked up since 1871 with the CTKS method indicator. Let's pop that on and see where smart money is buying and selling. The S&P 500 closed out at 44.57 and 50. We can see smart money structural buy levels at 44.35, slightly higher at 44.36.96 and 44.39. There are lower levels also of structural smart money areas. This means that we would expect the S&P 500, if it's going to go positive, it needs to do so very soon, very shortly. We can also see that the Nasdaq has been following that negative path. It's coming in to smart money structural support around that 1316 level. And if you want to see all the structural buy and sell levels, you can get the indicator from the service. Bitcoin is currently following the consolidation path under three-dimensional risk management and is currently 25,906. It's very important to know where smart money is buying and selling, and when we throw on the indicator, we can see that there were substantial smart money sell levels at 26,296, slightly higher at 26,335. We have a clustering of SLs, or Stanfield levels, around these areas. That means the price will often get redirected downwards. That's what smart money sell levels are all about. This structure has been marked up since 2009. Total crypto market cap is currently following a consolidation curve under three-dimensional risk management. I explained these curves inside the service. The sell-off inside the crypto market was largely because Bitcoin encountered smart money sell resistance, just couldn't get through. That impacted the entire crypto market. Total crypto market cap, which is currently 1.024 trillion, was fortunately caught at a smart money buy area of $1.019 trillion. We're now heading back into resistance at that 1.026 trillion and slightly higher at 1.028 trillion. That means that we may get through this and experience a little bit of turbulence, so just hang on. Looking through the crypto market, we can see as Bitcoin hit that overhead structural resistance and was pushed down, but fortunately caught by total crypto market cap, the crypto market went red. We know that total crypto market cap is coming into two levels of structural resistance. Knowing where smart money is buying and selling is very important if you want to be consistently profitable. The greatest gainers in the past 24 hours, top 100, CRO, XLM, XTC, KCS, HT, ASTR, Leo, and Monero. The greatest losers, past 24 hours, top 100, Synthetics, DYDX, LDO, Injective, GMX, Fracshare, Uni, IOTA, and Ape. One thing that you might like to keep a note of, when you get these kind of greatest losers after Bitcoin has just plummeted, these are very sensitive to Bitcoin's price action. Their followers, you must keep these things in mind as you seek to identify opportunities inside the market. This is a way to find the market's focus. In the past 24 hours, there's been 48.24 million in total liquidations, with long liquidations at around that $33 million mark. That's pushed the market down, but we can see things are starting to change around. More shorts than long liquidations on the 4-hour and also the 1-hour, unless of course you're in OGN, and that's getting hit by long liquidations, XVS, OG, BAL. It's important to keep your eyes on what's happening with the longs and the shorts. There are always opportunities inside the crypto market. The key is finding them, enhancing your pattern recognition. Being able to identify opportunities is key, but there's nothing more key than being able to act on those opportunities. Negative market sentiment occurs when people are out of the money, and when we look at Bitcoin, 36.43% are out of the money. With Ethereum, it's nearly 44%. ADA, 93.52% of holders, investors, and traders are out of the money. Doge, nearly 56% of people are out of the money. And when we look at Matic has been suffering dramatically. Nearly 94% of people are out of the money. When we look at net unrealized profit and loss, we can see that people were getting profitable and they've been suffering losses of late. We have an amazing global family of active learners. Art, who has been inside financial markets for probably more than 40 years. I'm coming up to 40 years, but Art has been there longer. Art shared something really beautiful with people. Art said, "My key takeaway, there are opportunities in every market. The key is to identify them and act on them. Acting comes from experience, but also belief in yourself and your own analysis. Strong convictions make acting possible. Opportunities change daily, so that's where active learning comes in. There are value opportunities, breakout opportunities, and inverter opportunities. And there are also follower opportunities and many, many others. There are so many ways to find opportunities, but it's not the same as acting on the opportunity. Thank you, Art. We appreciate you so much, my friend. And to everybody, the comments and watchers, you're awesome. When we look at Ethereum, we must understand, where is smart money buying and selling? That's the key. That's one of the ways to identify where the opportunities in market actually are. We can see Ethereum just like Bitcoin, and Ethereum is currently 1635 and 31. Ethereum came into several smart money sell levels, and when it encountered those levels, it just couldn't get above them. If a price can't get above an SL, where's it going to? It's going to the next SL below. If it can't get above, it's going to the one below. Now we've seen Ethereum get caught around that 1624 level, and that's good because that's quite a strong structural level. The next area of smart money sell resistance is at 1644. This is a way to identify opportunities, especially in crypto. Keep your eye on the Tier 1, Tier 2, and Tier 3 charts. You can see that Bitcoin came up to resistance. Exactly the same pattern was playing out on Ethereum and other alts. It's very important to know where smart money will buy and sell. And these smart money levels have been marked up on Ethereum since 2015. This is not recent indicative price or retail chart markups. RIP is appropriately named because it will RIP your money and give you a lot of stress in the process. From a path-based perspective, three-dimensional risk management, Ethereum is still following a neutral path. Solana is an incredibly powerful crypto project. It's very important to know, especially inside crypto, where are the safety nets and where are the ceilings. Retail thinks that there's one ceiling, one smart money sell level, and one floor or safety net. That's not the case. Smart money knows that there are multiple levels of both safety nets, which are support, and ceilings, which are resistance, and they're all different strengths. And if they accumulate together, they get stronger in either direction. What we can see currently is that Solana is trading at 1956. When Bitcoin and Ethereum were pumping up to their smart money sell resistance levels, Solana was also doing the same thing at 2010 and a higher one at 2029. What happened then? Solana couldn't make it through. Bitcoin couldn't make it through. Ethereum couldn't make it through. That put negative price momentum on the entire crypto market. As a result, Solana came back. But where was the safety net? It was down here at that 1938 level. Knowing where your safety nets are is an absolute game changer. It takes all the stress and tension out of buying and selling. The problem is, if you don't know what will typically happen when you see upward price momentum and you don't know where the ceilings are, you'll just FOMO in. And when price reverses on you, you'll think that you've got onto the wrong side of the trade and you are likely to sell around the bottom. When there's actually support down there, smart money support. If you know where the support and where the resistance levels are, it will change the way forever that you look at financial markets. You will find when you apply Rule 603, synchronization profits, when you understand where the smart money buy and sell levels are, when you understand the three-dimensional risk management paths and how they're playing out across Tier 1, Tier 2, and Tier 3 charts, it's an absolute game changer. Financial markets are far from predictability and control. You exist up here and far from certainty. That's why we need to give ourselves every single edge we can possibly give ourselves. Knowing how the Tier 1, Tier 2, and Tier 3 charts interact, knowing where smart money institutional buy and sell levels are, and there are multiple and they cluster. Understanding how junk bonds coming down, the yields going up, the DXY strengthening impacts negatively crypto, commodities, and the market is the game changer that you require to be profitable consistently. If you're new into financial markets, it's very easy to get emotional. That's Zone 1 and Zone 2 behavior. Zone 3 and Zone 4 are knowledge and learning-based behaviors. Zone 4 is positive excellence behaviors. That's all about mastering fear. We master fear with positive excellence. And why does this even matter to us? Because if you identify opportunities but you can't act on them, it's because of the way that you think. It's very easy to paint ourselves into a corner, or to just hold on for dear life no matter what price is doing. When things don't go our way, it's very easy to slip into negative excellence, which is the foundation of Zone 1 and Zone 2. Zone 1 and Zone 2 are where you are guaranteed to lose money. Zone 3 and Zone 4 are built on an opportunity mindset, and it's really important to be able to identify opportunities and also to be able to act on them. One thing that you will find, when you have an opportunity mindset through positive excellence, you can become kind to yourself, even if you mess up, because we either win or learn and never blame. Zone 1 and Zone 2 are full of blaming behavior. It's very important to get out of these two zones, Zone 1 and Zone 2, as quickly as you possibly can. And just remember, there's nothing wrong in being inside Zone 1 and Zone 2. These are the 4 stages that every single investor and trader progresses through to become consistently profitable and obtain real wealth, which is positive excellence and a meaningful life, as well as financial security. When you can do three-dimensional risk management, when you understand where smart money is buying and selling, when you can mark up your charts with the CTKS method, you'll find that you can leave retail thinking, Zone 1, Zone 2 thinking in the dust. And you need to, because it will cost you a fortune. To get to a professional level, we must understand Tier 1, Tier 2, and Tier 3 charts. We must understand the structural levels where smart money is buying and selling. And we need to project it out for the month ahead as well to understand where things could go. This is why applying three-dimensional risk management is very important. Three-dimensional risk management allows us to focus on price reality, not story-based analysis. Having an abundance mindset means that you can look for opportunities and you can act on them. Even if yesterday was a bad day, today has already reset. You control the trade or investment, but the market controls the return. It's very important to use three-dimensional risk management to understand your position can go down, go neutral, or go up, whether you're going long at spot or short under leverage. If you would like to get the smart money buy and sell levels on these 27 charts, the Tier 1, the Tier 2, and the Tier 3, foundation memberships are open for the CTKS method, but they are closing soon. To understand how to apply three-dimensional risk management, every single chart has an indicator and also a video. It's designed to give you a substantial edge inside every single financial market, and you need to know all of them. If you're going through a life pullback at the moment, please know that our global family's love and healing strength is with you. You are never given anything that you can't cope with, although sometimes it can seem very, very dark. During life pullbacks or during losses inside financial markets, we learn what is really important. We learn what matters to us. We learn to pay attention. In other words, we learn. Success in life and also in financial markets is largely a function of habit. Better habits create a better life, and a better mind creates better outcomes. We know that all results come from the mind, so we better tune up our mind as much as we can. That's why we have the CTKS Creed, daily positive affirmations for abundance, financial success, and happiness. This is not an academic exercise. This is about preparing your mind to act and identify opportunities. Without this, a lot of opportunities will just be passed over because fear will guide your decision-making process instead of courage. It's been a little while since we've gone through the creed, so let's go through it again. I know the universe wants me to succeed. Every day I show kindness, integrity, and gratitude. I know opportunities in life reset daily. I am worthy. I go slow to go fast. I start small and scale with Borsog. Buy on red, sell on green. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. I always solve my problems with positive excellence. These words are really powerful. They can re-engineer your mind to see things through the lens of courage and not fear. Fear of loss is ever present in life, but especially acutely inside financial markets. This is armor. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.